The reverse is in. Jerome Powell pauses Fed rate hikes, talks about the fact that the Fed is done, and the dot plot where they talk about where rates are going in the future shows signs of massive rate improvement in 2024. Stay tuned. I'm going to go over it, all of it, what it means for the real estate market in 2024 and more. Stay tuned. All right, Matt Gouget, Matt the Mortgage Guy, residential mortgage broker, licensed in 48 states, greatmortgagebroker.com. That's where you go if you want to connect me and my team. You want to get yourself pre-approved. You want to talk about buying something, no matter where you're at in the country, greatmortgagebroker.com. And while you're at it, subscribe to the channel. I talk about real estate. I talk about mortgage. I talk about what's going on in the market from the perspective of a mortgage broker who's talking to hundreds of buyers every single month. Hundreds of real estate agents month in and month out. And with those conversations comes some perspective on what's going on in the market, what's working, what's not with getting offers. Call it. It's all done. They're done. That's what they said today. And they've got something called a dot plot, which is where they plot the future predictions on what they're going to do with the Fed funds rate. And that eventually affects long-term mortgage rates. Well, higher for longer, out the window. Cuts in 2024 on the table. So with that, I'll show you exactly what happened with the 30-year fixed rate mortgage. I'll show you that 30-year fixed rate mortgage rates are lower than they've been in a long time. And by a long time, I mean May of 2023. And we'll get into my predictions for what's going to happen, not only to rates in 2024, but the real estate market in 2024. All right. Mortgage News Daily. I use this because they're not going to try to sell you anything. They're not going to create a lead funnel where you've got 94 different lenders calling you, begging for your business because they're going out of business. This is this blue line, the Mortgage News Daily, 30-year fixed rate mortgage, nationwide average, right? And it might cost you a little bit for this. If your credit's not perfect, you might be higher than this, and likely are, but it still gives you a pretty good average. And we can see, February of 2023, we inched below 6% for a moment in time. At the beginning of February, we saw rates go up quite a bit in the springtime, and then down again in April. And then it's been a pretty steady uptick over the last, 6 months up until mid-October, where we touched 8% for just a brief moment in time. I remember, and go back on my channel, I've got videos, I got receipts. I called a peak in mortgage interest rates. I talked with Mike Zuber about it on his channel, One Rental at a Time. Check that one out. It's great. I talked about it on my channel multiple times. I think this is the peak. I think there's enough data showing that inflation is coming down, that the Fed is going to be able to take their foot off the gas, might pump the brakes a few times in 2024. And so we've probably seen the peak in mortgage interest rates. Well, I don't want to say I was right. I was right. Um, at least for the time being, right? Like, who knows? Some crazy event happens and mortgage rates spike to 10%. Not going to happen, but anyhow, over the last 8 weeks, we've seen quite the rate rally. And this latest rally, 709 all the way down to 6.82, was just on the heels of the Fed. Not the fact that they paused at the meeting. And we've talked about this multiple times on the channel. It's what they said. It's the dot plot. That's what caused this rate rally go down to 6.82. So like I said, if you go all the way back, you got to get way back to May 18th, 2023 was the last time we saw 6.82 exactly, right? So 7 months since we've seen rates this low. Now, the more important part, what is this going to do for the real estate market in 2024? And you know what? Let's stay here. Let's stay on Mortgage News Daily because these guys, they've got good stuff. They've got housing data. And I've shown this before, and I'm going to show it again. Mortgage applications. When you look at mortgage applications next to interest rates, you see the correlation. And it's a strong correlation between what's going. There's the refinance index. Here's the purchase index. Now, we don't have enough yet to see what's going to happen with this latest rate rally. But based on what's happened in the past, rates down, purchase index, meaning demand, up. I guarantee you, with mortgage rates coming down, this purchase index is going to go up. It doesn't matter that it's December. Demand is coming off of the fence, and it's coming off the fence in a hurry. You know why I know that? Because I talk to people every single day. I talk to real estate agents who are talking to dozens of clients every single day. And so I can tell you before it hits the data, before it hits the newspapers, before it hits your inbox, I'm having the conversations. And every conversation I have, every new application that hits my inbox, every past, pre-approval from 3 months ago, 6 months ago, 9 months ago that hits my email inbox with, hey, Matt, we were looking back in June. We pressed pause. We'd like to re-engage. What would it look like if we bought today? Can we freshen up the pre-approval? Can we get you updated bank statements, updated pay stubs? And we've got a real estate agent who's going to take us out looking next weekend. Those are the conversations. Those are the activities that are the precursor to what you'll see in the data next week, the week after, month after, and then it'll reach, I don't know, the newspaper by February. Record demand in January of 2024 in this market and in that market. Trust me, there's going to be headlines in the future. I can read the future because I have all the key performance indicators that happened before the actions of offers in contract. spring market, even more competitive than 2023, which was relatively competitive in the springtime. People were like, oh my gosh, this is crazy. How is it this competitive when rates are at 6%, 6.5%, and they continue to go higher? We had the opposite happen in October. Rates were going up as demand was falling off because of seasonality. If we have rates going down as demand is ramping up for the spring buying season, it's going to be competitive. It's going to be tough. So hope that helps. Let me know if you have any questions, comments, concerns. Leave the comments down below. Subscribe to the channel so when a new video comes out, you can agree, disagree, but you can like the video and you can comment down below. Let's have a discussion about real estate. Let's be actively watching what's going on with real estate. As a buyer, you can't do yourself a bigger favor. Pay attention to what's going on. Get with a real estate professional and a mortgage professional that is paying attention to what's going on. The market today, how it's behaving in December of 2023 is vastly different than it was behaving in October. In October, 8% interest rates, crickets, stuff was on the market for 60 days. We offered 40,000 below list. We wanted 20,000 in credits. We structured it with the 2-1 buy down. Unfortunately, those days are fading fast and it's getting uber competitive because of lack of supply and more demand coming back because interest rates are coming down. That's all I've got for today. Thank you for listening. If you're still here after 12 and a half minutes, bless you. Subscribe to the channel. Thanks for watching. Until next time, we gonna see.